last 24 hours. This comes after the U.S. Federal Reserve's FedNow added a Hedera Hashgraph-based micropayments platform.
When someone like Cathie Wood speaks, markets listen. Not just because she manages billions, but because she's historically seen around corners before others do. She doesn't chase hype. She anticipates structural shifts. And that's why this isn't a simple price prediction video. It's a conversation about why this narrative even exists right now, and what it implies about BAR's role in the ecosystem. Let's be honest, a lot of price explosion talk in crypto is noise. People throw big numbers around like confetti. But Cathie Wood doesn't run on confetti. She runs on research, cross-asset analysis, and long-term structural trends. So when Wood's name gets attached to HBAR, even in speculative chatter, it deserves a deeper look. First, let's understand what makes HBAR different from most assets that get caught up in moonshot narratives. Hedera Hashgraph isn't a typical blockchain. It's a governance-driven, enterprise-focused distributed ledger built for predictable performance, stability, and scale.
The original intent was to own 1 million Bitcoin. So I actually think they will start buying, because I think this will help Trump in a couple of ways. The midterm elections, part of the reason he won the presidency, I think, was...
Hedera is governed by a council of corporations and institutions, which gives it a credibility edge when enterprises are evaluating blockchain technologies. That alone makes it unique. While most crypto projects chase decentralization as an ideology, Hedera chases adoptability as a strategy. That's not glamorous, but it's powerful. When you hear phrases like HBAR price explosion, what you should really be thinking is not get rich fast, but why would price move in the first place? And the answer to that starts with utility and demand, not hype. Price in any asset, especially crypto, is ultimately a reflection of demand versus supply over time. If demand increases faster than supply, whether through adoption, usage, institutional buy-in, or new real-world applications, price naturally rises to rebalance the market. So for HBAR to see a significant move in 2026, especially if someone as influential as Cathie Wood is spotlighting it, there have to be forces pushing demand in a real direction. There are a few big ones you need to understand. 1. Enterprise adoption. Unlike some networks that primarily court developers and retail users, Hedera's structure was built with corporations in mind. Predictability matters to a bank. Governance matters to a supply chain operator. Compliance matters to regulators. Hedera offers all of that, which is why you'll see real companies exploring real use cases on its network. And once enterprises start building actual products on a network, usage becomes sticky. It doesn't go away when price wobbles. That's utility, and utility drives fundamental value. 2. Token demand from services. HBAR isn't just a store of value or meme asset. It's the fuel that powers transactions, smart contracts, and services on the Hedera network. As usage of Hedera services grows, so does the need for HBAR to pay for that activity. Increased transactional demand is a structural driver that doesn't rely on narrative alone. 3. Institutional and regulatory comfort. This is where Cathie Wood's influence really intersects with the narrative. Wood and her firm, ARK Invest, have consistently advocated for crypto to be treated as both technology and finance, and they focus heavily on assets with clear technical merit and institutional utility. Hedera fits that mold in ways many cryptocurrencies do not. Think about this. A network designed with enterprise governance could be more comfortable for institutional allocators than a permissionless chain with unpredictable cost spikes or governance ambiguity. That doesn't guarantee explosive price performance, but it explains why someone with deep research capabilities would even talk about HBAR seriously. Now here's a nuance most people skip. Price talk, especially explosive price talk, isn't random. It isn't a tweet. It isn't a trend. It usually follows patterns of institutional awareness plus ecosystem readiness plus macro context. Let's unpack that. For any asset to outperform, 3 things typically align. Ecosystem utility is visible and growing. People aren't talking about potential anymore, they're talking about usage, partnerships, integrations. Institutional capital becomes comfortable allocating. That's not maybe someday. That's actual vehicles, custody, regulated products. Macro context supports risk assets. That means interest rates, liquidity conditions, inflation narratives, and risk appetite all play a role. When all three overlap, we see assets move, not because someone says they will, but because capital and usage collide. So if Cathie Wood, even indirectly, predicts or suggests HBAR could see a major move in 2026, she's not just talking candles. She's talking about the environment in which price becomes a consequence of adoption. Now, before we lose you to enthusiasm or panic, let's get one thing straight. No one can say with certainty that HBAR will explode in price. Not Wood, not analysts, not anyone. Markets are unpredictable because they are collective human systems built on emotion, risk appetite, narrative, and capital flows. But what we can do is interpret why a narrative exists in the first place. And the fact that a credible institutional voice is even connecting a name like Hedera to potential major upside tells you something deeper than price targets. It tells you that HBAR is being considered in conversations that matter beyond retail speculation. It's being thought of as infrastructure that scales, not just a token that trades. And that's an important distinction, because assets that trade on sentiment alone tend to rise and fall fast, and often without a foundation. Assets that rise on adoption, enterprise utility, and institutional recognition tend to build lasting velocity, and that's a very different story. So if you're holding HBAR, this moment isn't about chasing a price number. It's about understanding why the narrative is shifting. What is changing underneath the noise? Why are serious thinkers even associating a future with this network? And what does that tell you about capital flows, usage models, and structural demand? Those are the real questions you should be asking as 2026 unfolds. So now that we understand why people are even talking about HBAR, let's talk about what could actually drive a significant move in 2026. Not the hype, not speculation, but the structural realities that could create a real, measurable impact. Because if you're holding HBAR, it's not about panic or FOMO. It's about recognizing catalysts that change demand, adoption, and perception. First, let's be honest. Crypto markets are messy. They don't move like traditional stocks. They move like a combination of technology adoption, capital flows, and psychology, all compressed into a short time frame. That means a single announcement can do nothing, or it can trigger a cascade of reactions depending on context. That's why we don't just look at price charts, we look at what's happening underneath. One of the most important catalysts is enterprise adoption finally reaching scale. Hedera isn't designed to be a plaything for retail traders or meme speculation. It's a network built to handle complex enterprise applications with low latency and predictable fees. Think about supply chain operations, cross-border payments, identity verification, tokenized assets, and enterprise smart contracts. Each of these sectors represents millions, even billions of dollars in potential demand for HBAR. And that's not speculation, that's infrastructure. Once adoption begins to scale in these areas, transactional demand for HBAR increases organically. People often forget that a network's native token isn't just a speculative asset. It's also the fuel that powers real usage, that creates a floor of demand that can persist independently of hype cycles. Next is institutional participation. Cathie Wood and ARK Invest have a history of identifying technology trends before mainstream recognition. When she talks about HBAR, it signals that large institutions are at least considering or evaluating it. Institutional demand is a game changer because it introduces capital that is patient, sizable, and strategic. Unlike retail traders, institutions don't panic every time price dips. They allocate based on research, compliance, and the potential for structural adoption. Once institutional allocation begins in earnest, it amplifies price moves because liquidity is suddenly facing a new, more stable, and committed buyer base. Another key factor is regulatory clarity. One of the biggest friction points for crypto adoption is uncertainty around regulations. Hedera, because of its enterprise governance model, has a built-in advantage here. Corporations and financial institutions are far more likely to deploy capital when compliance risk is mitigated. If 2026 brings further clarity from regulators, confirming BAR's operational legitimacy, that alone could remove one of the biggest barriers to massive institutional inflows. And remember, Markets often price anticipated certainty well before it actually materializes. So even the expectation of regulatory clarity can drive meaningful price action. Then there's the ecosystem development factor. Hedera is not just a token, it's a network. And a network's value is proportional to the utility built on it. That includes applications, partnerships, and integrations. If major corporations launch projects, decentralized applications start running at scale, or payments platforms adopt HBAR as part of their infrastructure, each of these events is like adding fuel to a fire that's already smoldering. In crypto, utility drives organic demand, which eventually gets reflected in price. This is what differentiates speculative tokens from ones with structural momentum. Macro conditions also play a surprisingly big role. Hedera, like all crypto assets, doesn't exist in isolation. Risk appetite, liquidity, interest rates, and the broader investment environment shape how capital flows into high-risk, high-growth assets. If 2026 sees continued interest in technology and digital infrastructure, particularly assets that combine compliance, scalability, and institutional relevance, HBAR is positioned to benefit disproportionately. Timing matters. A structurally sound asset during a period of abundant risk appetite can experience exaggerated upside compared to the same asset in a risk-off environment. Finally, let's talk psychology. Market sentiment may feel intangible, but it drives short-term pricing dynamics. When a respected figure like Cathie Wood highlights an asset, it does more than signal research. It signals awareness. And awareness changes behavior. Analysts, institutional allocators, and even retail participants begin to reevaluate their assumptions. The more people consider HBAR a serious contender in the enterprise crypto space, the more capital flows toward it, and capital flow drives price sometimes faster than fundamentals can. Taken together, these factors form a lattice of potential upside. Enterprise adoption creates ongoing utility and demand. Institutions bring patient capital. Regulatory clarity removes obstacles. Ecosystem growth multiplies usage. Macro conditions set the stage, and sentiment amplifies participation. It's a combination of structural and psychological catalysts, the kind that often precedes significant moves in crypto assets that are still under the radar for most people. Here's the critical takeaway. An HBAR explosion in 2026 isn't about a tweet or a sudden meme-driven rally. It's about alignment of adoption, capital, regulation, and perception. All these forces converging could create a perfect storm where HBAR moves significantly higher, not because someone predicted it, but because the market finally recognizes its underlying value. That's the kind of explosive move that lasts longer and has more substance than a hype-driven spike. The smart takeaway for holders is to focus on these drivers instead of chasing price targets. Understanding the underlying catalysts, enterprise adoption, institutional participation, regulatory clarity, ecosystem expansion, macro support, and sentiment amplification allows you to interpret market moves rationally rather than reacting emotionally. Because volatility will happen. Pullbacks will happen. Headlines will overreact. But when you understand why a move could happen, you're positioned to act intelligently instead of panicking. If we're really talking about HBAR and the potential for a major move in 2026, the next question is timing. Not just will it happen, but when could it happen and what conditions need to line up for that momentum to materialize? Because in crypto, timing isn't about astrology or luck. It's about the alignment of adoption, capital flows, macro conditions, and market psychology. Each of these factors moves on its own clock, and understanding their rhythm can give you insight far beyond price charts. Let's start with adoption. Enterprise adoption is slow. It rarely happens overnight. Corporations don't integrate new infrastructure in weeks. They test, pilot, iterate, and scale gradually. That means BAR's potential for explosive price action is less about sudden news and more about visible uptake over time. Each pilot project, each integration, each partnership strengthens the network and increases transactional demand. When these signals accumulate, it creates a critical mass, a point where price may start reflecting utility more aggressively. And that is often when retail and speculative capital notice it, which can accelerate moves further. Then there's the institutional factor. Institutional investors aren't reactive the way retail traders are. They don't jump in because of a trending hashtag. They move strategically with compliance, custody, and allocation considerations in mind. When enough institutions begin to allocate capital toward HBAR, it changes the entire liquidity landscape. Suddenly, the market isn't just about retail supply and demand swings. It's about real, patient capital-seeking exposure that can suppress volatility on pullbacks and amplify upward momentum when adoption news aligns with sentiment. In other words, institutions can act as both stabilizers and catalysts, depending on how flows unfold. Next, we need to consider regulatory clarity. One reason HBAR is in the conversation for 2026 is its governance model. Hedera's Enterprise Focus Council gives regulators confidence, and that confidence has enormous consequences. If regulators signal that networks like Hedera are compliant, it reduces friction for institutional adoption. That isn't abstract. When compliance barriers drop, new capital can flow in without fear. Timing matters here too. Any 2026 developments confirming regulatory alignment could be the spark that transforms latent interest into actionable buying pressure. Macro conditions also dictate timing. Crypto markets are highly correlated with broader risk appetite. If liquidity conditions are favorable, if interest rates support risk assets, and if institutional investors are willing to allocate, high-quality networks like Hedera stand to benefit disproportionately. Conversely, if macro conditions tighten, even strong adoption stories may stall. This means that BAR's trajectory in 2026 is not just a function of its internal adoption, but also the broader investment climate. Timing the convergence of favorable macro conditions with visible adoption is critical to understanding when a price explosion could realistically occur. But let's talk about risk, because timing without context is meaningless. No asset moves in a straight line, and HBAR is no exception. Even if adoption accelerates and institutions allocate capital, there are moments of pullback, volatility, and hesitation. Some of this is technical short-term traders reacting to charts, liquidity shifts, or leverage-induced moves. Some of this is psychological, the broader market questioning narratives and adjusting sentiment. If you're watching HBAR, you need to separate short-term noise from the long-term trajectory. Volatility doesn't invalidate adoption. Pullbacks don't erase structural demand. They're just part of the journey. Market behavior is another piece of the puzzle. Historically, assets that have significant structural demand but are still under the radar for retail participants often experience quiet accumulation phases. Price may move sideways for months while usage grows, partnerships form, and capital positions solidify. During these phases, the market is gathering energy. Once retail attention aligns with structural signals, price can accelerate rapidly, not because fundamentals suddenly changed, but because perception finally caught up. That's often how the so-called explosions actually happen. Sentiment is also a timing amplifier. When a credible institutional voice like Cathie Wood signals potential, it isn't just a forecast, it changes awareness. Awareness, in turn, changes participation. Analysts, portfolio managers, and even curious retail participants begin paying attention. This is a multiplier effect. The more people notice HBAR as an enterprise-ready network with adoption potential, the more likely flows of capital respond quickly. Timing, in this sense, is partly determined by human attention and perception. One more factor to consider: ecosystem readiness. BAR's network can only support explosive adoption if the applications and tools built on it are prepared to scale. That includes smart contracts, payment rails, tokenized assets, and other enterprise solutions. If the ecosystem matures in 2026, coinciding with institutional capital entering and regulatory clarity improving, you have multiple catalysts stacking together. That stack is what can create the kind of momentum people call a price explosion. Finally, let's not ignore the psychological effect of waiting. People often underestimate the role of patience in crypto. Assets with strong structural drivers can appear boring for long periods. Investors who are comfortable with volatility and understand the underlying growth story are rewarded. Those who expect immediate returns often misinterpret sideways movement or minor pullbacks as failure. Timing is as much about personal discipline as it is about market alignment. Understanding this distinction is critical for anyone considering HBAR exposure. So when we talk about timing for 2026, it's a confluence. Enterprise adoption must gain visibility, institutions must allocate, regulatory clarity must improve, ecosystem tools must scale, macro conditions must be favorable, and market psychology must align. Each of these factors has its own timeline, and their convergence creates windows of opportunity. That's when structural catalysts become price action. In other words, HBAR isn't explosive because of hype or tweets. It's explosive when the universe of adoption, capital, and perception aligns, and timing that alignment is what makes 2026 a year people are watching. Price doesn't lead adoption. It catches up to it. And in crypto, catching up can feel very fast, very intense, and very profitable for those who positioned intelligently. So here's the reality. 2026 isn't about chasing headlines. It's about understanding the forces that actually move HBAR. Cathie Wood's prediction isn't a magic number. It's a signal that someone with billions of research behind them sees potential in a network that's quietly building real-world adoption, institutional comfort, and ecosystem scale. That's what makes this different from hype-driven speculation. If you're holding HBAR, the key is perspective. Volatility will happen. Pullbacks will happen. Headlines will scream. But remember, price reacts faster than adoption, and sentiment often overshoots. That means short-term panic doesn't equal long-term failure. It's actually part of the process, shaking out weak hands, redistributing capital, and letting patient participants accumulate quietly. The more structural growth happens behind the scenes, the more explosive the eventual reaction can be. Let's be honest, moments like this test patience. They test conviction. They make people question whether waiting was worth it. That's exactly what Cathie Wood and other institutional thinkers understand. They aren't chasing excitement. They are aligning adoption, demand, and capital, knowing that true market moves often feel slow, invisible, and frustrating until the tipping point hits. Timing matters. Utility matters. Institutions matter. Ecosystem maturity matters. And macro conditions matter. When all these factors converge, price moves aren't random. They are the market finally catching up to reality. And that's why 2026 could be very different for HBAR. Not because of hype, but because fundamentals, adoption, and perception are finally aligned. Here's the thing, this isn't just theory. It's a chance for you to step back and ask the right questions. Are you holding for the right reasons? Do you understand why HBAR could move, not just that it might move? Are you prepared for the volatility that comes with structural growth? If your answers are aligned, you're positioning yourself differently than the crowd that reacts emotionally to every headline. And that's where the opportunity is. Volatility shakes out fear, but conviction survives it. Awareness grows slowly, then suddenly. Institutions move strategically, and adoption compounds quietly, until one day it feels like everything is happening at once. That's the environment where a prediction like Cathie Wood starts to make sense. Not as hype, but as a reflection of alignment across multiple levels. If this breakdown helped you think differently about HBAR, make sure you're subscribed. We focus on context over chaos, structure over panic, and strategy over emotion. Drop a comment and tell me, are you holding HBAR for adoption, institutional alignment, or the potential 2026 upside? Your answers matter because clarity beats noise every time. Stay patient, stay informed, and watch how the market finally aligns with what you already know. 2026 could be the year HBAR moves in ways that surprise everyone, including those who doubted it.